Central Bank of Nigeria may intervene directly to provide needed funds to boost private sector liquidity. Federal government set to implement new template for operating surplus. Plus, Nigerian Bank approves 25 billion naira loan in support of Nigerian exporters. Now, details of these and more on this edition of Business Express. I am Amina Nujaim. Always a pleasure having you join us on the program. In the news today, following commercial banks' growing reluctance to extend credit to the real sector, the Central Bank of Nigeria (CBN) may intervene directly to provide much-needed funds to boost private sector liquidity. This is one of the fresh initiatives of the Apex Bank that was sanctioned by Tuesday's Monetary Policy Committee (MPC), a move to tackle the dwindling flow of banking sector credit to this critical segment of the economy. Figures from the Central Bank of Nigeria shows that credit to the private sector fell in May 2018 to 22.207 trillion naira year on year, as against 22.254 trillion in April. The CBN report had shown that industry gross credit recorded a 3.63% decrease in April 2018, the lowest since January of 2017. Now, the federal government is set to inaugurate the use of new template for calculating the operating surplus payable by government agencies, departments deemed as revenue-generating organizations. The Fiscal Responsibility Act requires listed agencies to pay 80% of their operating surplus into the Consolidated Revenue Fund while retaining 20%. The operating surplus is made up of revenues accruing to government agencies above what they are approved to spend at the beginning of the budget year. In other business developments, the Nigerian Export-Import Bank (NEXIM) has approved the disbursement of loans totaling about 25 billion naira in support of various projects in the non-oil sector. Managing Director and Chief Executive Officer of NEXIM, Abba Bello, said beneficiaries of the loan include exporters of agricultural and value-added products who submitted applications for stock facilities and working capital to enable them execute their export contracts. This is coming after the review of applications under the Export Development EDF at the meeting of the Board of Directors. The federal government says it has concluded plans to expand the broadband coverage of the country through the licensing of private broadband providers. Vice President Yemi Oshinbajo, who said this while inaugurating Google for Nigeria in Lagos, added that the measure would improve the digital space and opportunities for innovations and technological advancement of the country. Meanwhile, President Muhammadu Buhari left Nigeria for the Netherlands to honor the invitation of the International Criminal Court of Justice as the first president to address the session. At the end of that visit, however, Nigeria's economy was the better for it, as the president used the opportunity to do what he has been doing in other places that he has visited. This is to engage investors and business communities to market the nation, especially her new approach to doing things. What were the gains of this visit? Join us shortly for the answer. President Muhammadu Buhari visited the Netherlands on the invitation of the International Criminal Court of Justice. But the oil and gas sector also gained from the visit, as Nigeria was able to secure investment in that sector. I am now being joined in the studio by the Group General Manager, Crude Oil Marketing Division, NNPC, Mele Kyari. Welcome to Business Express.
Thank you very much. Welcome. I'm very grateful.
Now, can you expatiate what the significance of the present visit to the Netherlands on the oil and gas industry in Nigeria is all about?
Thank you very much. As we may all be aware, Mr. President, at the back of the ICC visit, engaged CEOs of major companies operating in Nigeria. And of course, one of the major players in the Nigerian oil and gas industry is Shell, the Shell Group. So the Shell Group participated in the engagement with Mr. President and affirmed their commitment to invest at least $15 billion in the Nigerian oil and gas industry. And that will particularly be focused on the gas development, on deep water assets development, and including that of LNG development. That is quite significant and profound in the sense that, typical commitments like this are hard to come by. These are not time for people to make massive investment, but Mr. President was able to secure commitment of the Shell Group to invest at least $15 billion in the industry. And also at the back of that engagement, Mr. President visited the Shell refinery in Rotterdam, which is just a few kilometers away from The Hague, where the ICC meeting took place. What is important and significant about this is that that is one of the oldest refineries in the Netherlands. Actually, the first process plant was created in 1902. You can see that it has come a long way. And not only that, you can also see that a refinery can be very old and still be useful. Yeah. And it can still be regenerated to levels where it can be of use today and make it to be the world standard and world level. And that also fits into our understanding of what we want to do with our refinery in the country. Mr. President's visit enabled us to see that that is a co-located refinery. There are about 2 refineries in one place. The oldest refinery, many investors are operating in the same place, sharing facilities and infrastructure. And therefore, it's kind of an eye-opener for us, that an assurance that we can change our own story. It fits into our own plan of making sure that our refineries come back on stream immediately and in the best possible manner so that we can bring them to us. And yes, in a nutshell, that visit is quite significant for the Nigerian oil and gas industry.
Now, talking about the significance of the visit, what would you say the president's engagement with the business community was like? What were the takeaways? What were the issues that were on ground?
The investors, particularly for the oil and gas industry, they would like to see a stable fiscal environment. Mr. President assured them that there will be a stable fiscal environment, which is critical for oil investors. They would like to be sure that you have a stable policy system that will guarantee that their investments are not threatened. Mr. President gave them that assurance. And on the back of that, it means that their $15 billion investment is secure. They will benefit from it, and our country will benefit from it. And that's the way I see it.
Okay, that means it's good news for Nigeria.
Yes, it's a lot of good news. You hardly get this type of commitments from investors. And that's coming at the back of their trust that Mr. President is prudent, Mr. President is transparent, and Mr. President is able to enforce his will to make sure that people do the right thing. And therefore, they know that the fiscal environment will be stabilized.
Just after the Netherlands, Nigeria and Niger signed an MOU on crude oil. Now, what would you say the takeaway is from that?
The takeaway is that the MOU is about, as it's very popular, the takeaway is about building pipelines and a refinery in our country. What that means is that, the Niger crude will come into this country, it will be processed here, it will be added, value will be added here, and it will solve most of our problems of petroleum product supply, because it's going to shorten distance of supply to some of the locations. It will create investment, it will create jobs for our country, and indeed is one of the great things that has happened in recent times.
Okay, in our discussion, you did talk about the fiscal policy. Are you referring to the budget implementation?
No, I meant about the petroleum fiscal environment. That means the laws and regulations and the basis of investment that regulate the investment in this industry, so that the investors are sure that when they invest, they can get back their money and they can make profit from it.
Now, back to the Niger issue. What's the significance of that?
The significance is that first, you're going to have a refinery. We're going to add to our slate of refineries that are on ground, the 4 NNPC refineries, the Dangote refinery, and then of course if you have this, now at the end of the day you're going to have stable supply of petroleum product into our country. That's very critical for us. Then secondly, that is going to create employment, is going to create jobs for our people. What
would come first, the crude or the refinery?
They go parallel. You can't have a refinery starts getting installed, and as you are doing that, you lay your pipelines so that you deliver crude oil into refinery. By the time your refinery is completed, you should also have your feedstock in place. So they go together.
There's so much development. How optimistic are you about all these developments?
It's clearly backed by a process that will deliver it, in terms of financing the projects, in terms of getting the right technical partners, and in terms of commitment of the two governments to make sure that this is delivered. And I have no doubt that this will work.
We have been talking to the Group General Manager, Crude Oil Marketing Division of the NNPC, Mele Kyari. Always a pleasure to have you on the program.
Thank you very much. Good to be here. Thank you.
In the meantime, the International Monetary Fund, IMF, said the US dollar was overvalued and that the value could add to the growth risk and trade tension. The IMF, in its annual external sector report in Washington, said China's yuan was in line with the fundamentals and nearly half of global excessive current account balances. The IMF said the US dollar was overvalued because current account surpluses and deficits were becoming increasingly concentrated in advanced economies. The IMF report was based on exchange rates and current account surpluses and deficits. We're going to take a quick break and be right back. On Friday last week, the Central Bank of Nigeria commenced the auctioning of Naira for yuan as the implementation of the Memorandum of Understanding between Nigeria and China on the renminbi took effect. The Naira for yuan swap deal was secured in May after the signing of the MOU. It is worth $2.4 billion. The currency auction is to last 3 years and expected to increase trade and reduce pressure on the Naira-dollar exchange rate. One of the major sources of acquiring the exchange rate for foreign currencies is the Bureau de Change. We will now take a look at how major currencies around the globe are trading. And to the capital market. Equities transaction on the Nigerian Stock Exchange reversed the two-day consecutive downward movement Thursday to close positive. Details with Muplang Dakok.
Trading on the Nigerian Stock Exchange went up following price gains recorded by blue-chip stocks like Honeywell Flour Mills and Qtix. The NSE All Share Index gained 80.42 points, representing a rise of 0.22%. Market capitalization gained 29 billion naira to close at 13.196 trillion naira. 171.2 million shares exchanged hands between investors in 3,595 deals valued at 2.978 billion naira. The financial sector topped activity chart led by Zenith, UBA and FCMB. Honey Flour, Qtix and ICO Insurance gained the most, while the losers table was led by Nimet, Wapik and Custodian.
Many thanks, Muplang. Crude oil prices rose for a second day after data showed U.S. crude inventories fell more than expected, easing worries about oversupply that have dogged the oil market in recent weeks. Following the drop in U.S. inventories, the global benchmark Brent crude rose by 40 cents or 0.55% from 73.43 per barrel to 73.84 US dollars per barrel, after gaining 0.5%. The U.S. West Texas Intermediate WTI crude also rose by 20 cents from 68.52 to 68.72, having risen nearly 1% in the previous session. UK energy supplier Erisa has ceased trading. Let's take a look at the graphic summary of commodities across the globe. next is Global Market Report. Stocks in Europe advanced on the heels of a mixed session in Asia as corporate earnings again took a front seat. Bosede Abel has details.
The U.S. market closed mixed on Thursday, July 26th. Nasdaq shared 1% as Facebook leads tech plunge. Dow Jones Industrial Average gained 0.44%, while S&P 500 dropped 0.30%. Asian markets traded mixed. Nikkei rose 0.34%, Shanghai depreciated 0.06%, and Hang Seng Index also decreased by 0.04%. European stocks closed higher after US-EU trade gathering and external commercial borrowings ECB meeting. FTSE depreciated 0.06%, while DAX and CAC remained unchanged. Stock markets in Africa were mixed. South Africa JSE Africa Top 40 maintained positive gain of 0.86%, Tunisia Tune Index 0.82%, while Namibia Overall Index, Nairobi All Share and Ghana's GSE Composite were on the low.
Many thanks, Bosede. Now that's a wrap on Business Express for this week. Let's do it again on Monday. I am Amina Nujain. Thanks for watching.